Town Bank Mortgage, NMLS number 512138, is an equal housing lender. This podcast is for informational purposes only. And now, the man born with a 5 o'clock shadow and with the NMLS number 2028201. He is a gentleman. He is a scholar. He is
Tyler Crawley.
So it's a good Wednesday. Not going to lie. We got a bond market that is open and moving in the right direction. We got yields down, I think at one point, almost 5 basis points. So I'm pretty happy about that. But this is Wilmington Mortgage. I am the aforementioned host of this podcast, Tyler Crawley, and loan officer, Town Bank Mortgage, right here in Wilmington, North Carolina. So I've decided there's something else I want to do with the program on episode 4. I think we're on episode 4. I love how it's like not even a high number, and I'm really showing off my math skills. Episode 4. So I've decided my goal is to try and get the show done 15 minutes. 15 minutes or less to let you guys know what is happening with mortgage rates every single weekday, Monday through Friday. That is the goal. I think I can do it. 15 minutes or less, or your money back. You get it? Because you're not paying for the podcast. That's the kind of humor that you can expect here on Wilmington Mortgage. All right, so we got a lot to get to. A lot going on with the Fed. We got to talk about some comments that Scott Bessent made, Treasury Secretary, and then, of course, we got some mortgage demand data. But let's start, I think, with the top story, and that would be Nick Timiraos, a.k.a. the Fed Whisperer, over at the Wall Street Journal wrote a piece last night about the Fed undecided about the December rate cut. Now, I thought that was going to be bad for markets because, well, we've already kind of priced in a December rate cut. So the fact that that's not 100% guaranteed, I thought markets might not be a big fan of that. However, because the government shutdown might end tonight, that brings some security to U.S. Treasuries, which is why you are seeing, I think, a positive market, plus Bessent's comments, which we'll get to. But let's talk about what Timiraos wrote last night. So he said, the path for interest rate cuts has been clouded by an emerging split within the central bank. He wrote, indeed, a key reason Powell pushed back so bluntly against expectations of such a cut at the press conference that day was to manage a committee riven. I think that's right. Riven? I think it's riven by seemingly unbridgeable differences. Now, there are 3 main questions that need to be answered going forward at that December meeting that are going to make the decision on whether or not there's a rate cut. So first, will tariff-driven price increases prove to be a one-off? Now, if the Supreme Court rules they're unconstitutional, we could have our answer. Otherwise, that's still up in the air. Second, has monthly payroll growth fallen from around 168,000 in 2024 to just 29,000 on average for 3 months through August. And now we are hearing today that it is unlikely that we are going to be getting any BLS data for, I think, October. So no jobs report, no inflation report, none of that. So that could complicate things. But the big question is, has this fallen off because of weaker demand for workers by businesses or a weaker supply because of reduced immigration? And then third, are interest rates still restrictive? And so once again, Nick Timiraos, the Fed Whisperer, he knows what's going on at the Fed. And so if he's writing about it, these are the questions that are being asked. And so we if we can get answers to those questions, we're going to know which way the Fed's going to go. So that's all we got to do. It was also an interesting day for the Fed in general, as this morning the news broke that Raphael Bostic, the Atlanta Federal Reserve president, would not be staying in his seat once his term expires in February. He would be, I guess he could stay on for another couple of years if they wanted to reappoint him. But he's like, no, I'm done. I am done. He is saying that he will retire when his term expires. So that will leave a opening for President Trump to appoint someone else. And then a little later in the day, we got news the Supreme Court is set to hear oral arguments on whether President Donald Trump has the authority to fire Federal Reserve Governor Lisa Cook. So we got a lot going on with the Fed when there's not a lot of news out about the Fed because we got Nick Timiraos basically giving us a blueprint of what needs to happen in order for there to be a rate cut in December in the ongoing debate within the Fed. And then on top of it, we got news about Bostic and Cook, kind of just really creating an interesting day for news about the Fed when nothing happened with the Fed. So an interesting day. So we're not going to find out about Lisa Cook until the new year. Bostic won't be leaving until February. And then, like I said, we got the December meeting and what's going to happen with regards to a rate cut. We answered those 3 questions. Are rates still restrictive? What's with the weakening labor market? And what's happening with inflation and this tariff issue? So there you go. Now, like I said, today's been pretty good for rates. Now, I thought kind of all of that craziness with the Fed, some investors might see that as a distraction. But it turns out, no, they're okay with it. Because, once again, the 10 years down about 4 basis points. So investors were like, I guess they're happier about the government reopening, which, like I said, could be happening today. So they're balancing government, kind of chaos at the Fed. They like the reopening of the government, apparently. All right, the second biggest story, I believe, was Treasury Secretary Scott Bessent speaking at the New York Fed, talking about the Treasury market. And this obviously is big deal for mortgage rates because, once again, mortgage rates are set by the 10-year Treasury. So that's the relationship. So Treasury market's very important for real estate. And Scott Bessent was very optimistic. So that is the good news. Once again, speaking at the New York Fed, he described his role as the primary caretaker of the Treasury market, hence being the Treasury Secretary. He emphasized both its financial and social importance, saying treasuries are not only the bedrock of global financial system or of the global financial system, but also the American dream. Bessent linked treasury yields directly to everyday economic life for everyday people, saying they determine whether a young family can afford a home, a college student can buy a car, or an entrepreneur can get that small business loan. And he's not wrong. I mean, everything is sort of based off what is happening with the treasury markets because treasuries are the gold standard. I mean, it's the safest investment that you can make other than, I guess, cash. I guess that's the safest. I don't know, though, with everything that's been going on, but it's the best debt instrument that you can purchase. And that is the value of the United States. Now, the health of the Treasury market, he argued, underpins affordability and quality of life across the United States. Once again, not wrong. And here's the good news. He said, we are succeeding. He says the U.S. Treasury market is more robust and more liquid than it's ever been. Now, of course, liquidity is the key to the Treasury market. That is one of the reasons why people buy treasuries is because of how liquid they are. If you need the money, you can sell it and get dollars is why you'd be selling it, obviously. But you can do that. You know, that's what makes the U.S. Treasury so solid is because it's basically like cash because you can pretty much immediately flip it and get dollars if you need them. And that is, remember, what happened in 2020 that people did not realize was credit markets froze up. And of course, credit markets are completely reliant on the ability of selling these debt instruments. If you have a debt instrument, you need to sell it. There need to be buyers. So him arguing that it's more liquid than ever is exactly what investors want to hear. They want to know that if they're buying something, they can get out of it as fast as they can get into it. He credited efforts to boost demand and broaden access to government debt, saying that the department is, quote, poised to make even more progress towards this goal in the months to come. He did caution, of course, that volatility can never be eliminated. It's always going to be there. But he stressed the importance of a market strong enough to absorb those shocks. And of course, the size of the market helps as well, because you can have volatility in one area, and if it's big enough, it's not going to cause a domino effect. It's not going to bring down, it's not going to be a house of cards situation. Initiatives he pointed out, like the Treasury buyback program, reforms to the enhanced supplementary leverage ratio, and expanded central clearing are keys to that resilience. He said, despite rising demand, Bessent reaffirmed his commitment to the Treasury's longstanding, quote, regular and predictable issuance framework. So he's saying, hey, there's people that want to buy these, but we're not going to deviate from what we've always done. We're not going to be like, oh, let's just flood the market with treasuries. They're not going to do that. So bottom line, Bessent's message was very clear. Treasury stability isn't just a financial metric. It's a foundation for economic opportunity, strengthening liquidity, and reinforcing predictable issuance. The department aims to keep borrowing costs steady and ensure the world's most important bond market remains a pillar of both global finance and American prosperity. So there's another reason why you are seeing positive movement today for rates, because you got the government reopening, and then you got Scott Bessent, who's like, guys, I know how important the Treasury market is. I mean, this is someone who worked on Wall Street. This is someone who understands. He worked for Soros, I think, right? Yeah. I think he was the guy that did the big sterling trade. And so, I mean, he understands currencies, he understands markets, he understands all of these things. And so he's like, listen, guys, it's about liquidity. It's about stability. That's what I'm going to do for the Treasury markets. That is good news for us. That means we will see lower rates because we will be the best place to invest. So this is great news. And I think one of the reasons why, despite some of the news out of the Fed and some possible reality, there could not be a rate cut in December, we are hearing good things about the Treasury market. So good news from Treasury Secretary Scott Bessent. And we appreciate that. We do, right here in Wilmington Mortgage. All right, third story. Let's get to it real quick here. Mortgage demand not really impacts things, just gives you an idea of what's happening on a national level. Mortgage demand climbed last week for just the second time in nearly 2 months, thanks to a rebound in home purchase activity. So we actually saw a little bit of a jump with purchases, which have been down for a little while. Total mortgage demand jumped about 0.6% for the week, according to the Mortgage Bankers Association. They put out the weekly survey. The increase was driven by an almost 6% jump in the purchase index. That was the strongest level in 7 weeks, while refinance activity slightly pulled back as rates edged higher. The average contract rate for a 30-year fixed mortgage ticked up 3 basis points to 6.34%, marking the second straight weekly increase. Then just to give you an idea of what happened with adjustable rate mortgages, which remember everyone was freaking out about recently, the whole 10%. Oh my God, we're over 10%. 7.8% now. So the arms. FHA loans gained ground, rising to just under 20% of total apps. VA loans dipped slightly to 14.8%. But I think the reason why you saw an increase in purchases, even though rates kind of ticked up, is it's actually a pretty good environment for buyers because, rates they're up a little bit, but like I said, over the last couple of years, these rates are phenomenal. And then on top of it, you're seeing, this kind of a slower market. So buyers or I should say sellers are a little bit more open to maybe working out a deal. So you got you got one of the best rates that we've had over the last 3 years. And then on top of it, you could be negotiating a better price or seller concession or whatever. And so it's not a bad time for buyers. And so I think some people are realizing this and they're like, let's do it. So there you go. 15 minutes or less. I told you that's what we're going to do here on Wilmington Mortgage. I promise you that's the goal. Some days it might go over. I'm just saying. Today was close. Today was very close. But I think we're going to do a pretty good job of keeping it under 15 minutes. I'm feeling confident. But you guys enjoy your Wednesday. We'll talk to you again Thursday for another edition of Wilmington Mortgage. Remember, as always, do not wait to buy real estate. You buy real estate and wait.